Well, good morning, everyone, and welcome to the Minnesota Real Estate Show. Thank you for joining us here Saturday, December 17th, and we are live here at Twin Cities News Talk AM 1130 for the Minnesota Real Estate Show, hosted by Luminate Home Loans. Today in studio, Alex Grip. My name is Ryan O'Neill, and also Scott Wolmering is the co-host of the Minnesota Real Estate Team with RE/MAX Advantage Plus. Hope you're having a great weekend. So far, a nice start to the weekend. We've got a fun show. We're going to be here from 10 until 11. We welcome your questions, your comments, your thoughts. It is a live show. We're streaming on all the social media channels, wherever you might be seeing us. Thanks for tuning in and thanks for joining us. A lot to talk about. As we look out outside, we see the snow flying here. So if you're out and about today, drive safely. But want to welcome in again Alex Grip from Luminate Home Loans and Brad Sanford from Farmers Insurance. Good morning, guys. Thanks for being here.
Good morning.
Good morning.
Yeah.
You made it in.
Yes.
Made it in, safe and sound.
Made it in, and we're going live on air right now. Twin Cities News Talk, AM 1130. Well, good morning, everyone, and welcome to the Minnesota Real Estate Show. Thanks for tuning in. Saturday, December the 17th, 2022, and we are live here at Twin Cities News Talk, AM 1130, every Saturday morning for the Minnesota Real Estate Show, hosted by Luminate Home Loans. Today in studio, Alex Grip, and also Scott Wolmering and myself, Ryan O'Neill of the Minnesota Real Estate Team, RE/MAX Advantage Plus. This is a live show from 10 a.m. to 11 a.m. every Saturday morning, and we welcome your questions, comments, thoughts on all things real estate, mortgage, home insurance, home improvement, you name it. You can call us or text us at 612-294-6949. That's 612-294-6949. I've got a lot to talk about here today, and in the first segment, we normally dive into a real estate update and a mortgage update. Want to welcome both of our guests live in studio here, Brad Sanford, Farmers Insurance, and Alex Grip with Luminate Home Loans. Good morning, guys.
Good morning.
Good
Excited
morning.
to be here.
Nice to see you guys. You made it in from the snow here into the studio.
That's right. Road's a little tricky out there, so be safe if you're out there holiday shopping.
Holiday shopping. Brad, you doing any shopping?
I got mine done this week. Yes, absolutely.
We were just talking before the show. Brad, the father of 4 wonderful children. A lot of gift giving, I bet there, Brad.
Yes. A lot of thought goes into what you get each child, right?
Each child and in-laws
Significant others. Yeah.
and extended family, and it's a lot of gift guy. You're a good guy though. I bet you buy a lot of stuff.
The wife and I treat them right. Yes, absolutely.
Alex, what do you think? You done your Christmas shopping?
You know, I've got a pretty easy task being single with no kids. I just got to worry about my mom. That's it.
That's good. That's good. Our mothers, yes. And my mom too. Always got to get a nice gift for mom. Good morning again to everybody joining us on social media and those at Twin Cities News Talk AM 1130. We appreciate you joining us. Hope you and your families are having a nice start to the holiday season. We are here to provide information, provide content to help you make good buying, selling, investing decisions, home insurance decisions here in the Twin Cities. And again, in the first segment, we always do like to cover an update. What's going on in the Twin Cities as we see snow flying in December? We're going to start first with Alex. Luminate, what's cooking in your world?
Well, just get this out of the way. This week was a big week for the economy. Inflation numbers came out a little bit better than expected. The Fed rose their federal funds rate by 0.5%, which is down from the previous 4 months. So all those signs excited the mortgage interest rate market a little bit. So we're down sitting around 6.3 average rate. Of course, there's a lot of different scenarios out there, but that's average what people are getting on a 30-year fix these days. Yeah, so all signs getting ready for an exciting 2023.
So the Fed funds went up 0.5. I know the last few ones have been 0.75. And was it an immediate decline in mortgage rates you guys saw that day or the day after?
Yeah, pretty significant correction down after those inflation numbers got announced on Tuesday. Market got a little bit too excited, self-corrected later in that day, and then the news, as expected from the Federal Reserve, increasing their rate 0.5%, stabilized the marketplace there.
Alex, what are you seeing with some of your clients? When I share the real estate update, a common theme is affordability. What are you hearing from some of the folks that you're working with, maybe first-time home buyers, people looking to move up a little bit from an affordability standpoint with interest rates, rising prices over the last few years? Anything you're seeing in that area?
I think mostly each time I meet with a client nowadays, they're not shocked by the interest rate conversation. They're also intrigued by how they can lower their rate, what seller credits can do for their scenario. So I think a lot of the conversation is about education, where we're at, where we feel like we're going, and what you can do today.
Yeah, it is. It's interesting as we look at the real estate update in the Twin Cities. New listings are down almost 19%, 717 new listings. Pending sales or accepted purchase agreements down 34%. So a pretty significant drop in accepted purchase agreements, and the overall inventory level is up 14%. Part of it, what they're talking about, is home builders. And home builders the lack of new construction, the lack of inventory out there. The U.S. Census reported that the median square footage of homes under construction was 2,276 square feet in the third quarter of 2022. That's down 2.5% from the fourth quarter of 2021. Where the median square footage was 2,335. So the trend, guys, is to smaller homes because of the cost issue. Any thoughts on that to share or add?
I live in a 450 square foot apartment, so 2,000 square feet, I mean, seems like a palace to me. But
Talk about that, because I think that's a really important point. You are an investor, homeowner. How did you make that decision? You know what I mean? Because a lot of people think, hey, big, we need more and more and more.
Right. For me, renting is temporary. It's just all the larger plan to keep on accumulating real estate. Because I've lived in each property that I've owned and moved out of there and put a renter in behind me. That's part of a long-term goal of mine. But yeah, space has never been a priority for me. Having tons and tons of space, I try to keep a minimalist lifestyle because I'm expected to move every year, every couple of years.
So your approach is to buy something and then eventually to rent it?
Yeah.
Tell me more.
Absolutely.
Why?
Yeah, I think that real estate for the average person can really transform your life. Buying something that generally goes up in value and having someone pay down the debt on it is a really compelling proposition, especially if you are trying to have options into the future, not be beholden to one job, right? Like working because you have to. It's about, for me, planting seeds that will bear fruit into the future.
Yeah, I had a comment here, Mark. Thank you for joining us too on social media. He asked, is that year-over-year numbers? And those are. Yep, those are year-over-year numbers in the market numbers that we share. Again, inventory up almost 15% to 7,879. But we have to remember too that we are historically at a low supply. And really across the country, when you look at all of the national news, all of the reporting, supply is a huge issue. The lack of supply that's out there for buyers. Our team, the Minnesota real estate team, we have a lot of clients that can't find a home right now. I mean, I see emails every day. Hey, I have a buyer looking for this. Does anyone have anything? It's pretty amazing to me. Again, I think of from being in this industry now, over 20 years, that's rare. I don't remember another time where I've seen so many messages looking for inventory, Brad. What do you think?
Well, and I hear it a lot more. People like Alex, young people are buying a home and renting it, and having someone else make the payment, like he said. And, I think a lot of the times you hear people, Alex, how did you get over that risk aversion of owning a home and someone not making the payments? Because I think a lot of times that's what holds people back is they have this investment and they like, can I rent it out? That kind of a thing. And so I think that was an obstacle for myself when I was young.
Talk about your journey, though, home ownership wise, with you and your wife. Tell us how that went.
Well, so we rented right away, rented an apartment like Alex. And then we were going to have a family. So we bought a home. And we bought a home that we thought would fit one or two kids. And then you start buying Christmas gifts,
Right?
And then you want like 10,000 square feet. That's not enough, right? Because they got everything spread out. You just kind of want your own space, and you're thinking, man, it would be nice to be back at the apartment. But you want as much space as you can have, so they can have their own play area. You can have your own, working on things area, and the wife can read a book or whatever it is. And I think as your family grows, you just naturally kind of get a little bit bigger home. And then when you get older, you want to, size down and get back to what's good for just the two of you. And unless you got two kids that are still staying in the house, even though they should be out on their own.
Right. Yeah. Well, we're already at the first break here at the Minnesota Real Estate Show. Appreciate so many people on social media joining us wherever you might be finding us. Thank you for that. If you have questions, comments, thoughts, items you'd like us to talk about here in the market, please don't hesitate to comment with that or call us 612-294-6949. This is the Minnesota Real Estate Show.
Ryan, I got a listing question for you. Maybe you want to do this on air, but if you're talking to a homeowner right now that's looking to sell,
Yep.
Are you coaching them to wait until like March to list?
Well, that's a good question. Should you wait to sell in this market with, again, historical low supply? Right now, I think it's a great time. Partly because, again, there is still a really strong buyer demand out there. And I think that's part of it, Alex, that I think there is that strong demand. And so that I just think bodes well for sellers. Now, again, in the spring market, obviously there's going to be more homes on the market, but I think that buyer demand will still be there. So I think the best time is always right now, personally.
Gotcha. Yeah, I've heard the Super Bowl is like the kickoff for the spring market in Minnesota.
Right.
It's like an unofficial start date. It's like, all right, here we go.
Right.
Isn't that when the parade of homes starts too, right around that time?
Yeah, the parade gets going.
Yeah.
Absolutely.
Yeah.
The new construction. One thing I wanted to share too with our listeners, kind of an exciting update, social media. We wanted to tell you that our show, the Minnesota Real Estate Show, we're actually moving to a new time and date and a new station in 2023. We're going to be moving to FM. FM, it's 105.1 Sunday mornings from 8 a.m. to 9 a.m. on Sundays. And you'll probably be hearing maybe some of our ads as well on KQRS and 93X on the morning show and kind of throughout the week. But we're super excited about the new time that we're going to be on Sundays. It's an FM station. And so again, just wanted to give you a heads up as listeners. We so appreciate you listening over the years. In 2023, we're going to be starting that. But we did have a question come in here. It looks like this one is home owners insurance related. Kim just mentioned, she said, how often do I need to evaluate my policy? Brad?
I think every year or every 2 years is the best policy because you have several areas in your insurance that you're looking at. You're covering your personal property. You're covering the liability that protects you if someone falls, which I just learned about at Continuing Ed this week. And then you've got the value of the home. It goes up and down. And insurance companies, we're good to raise, but we're not as quick to lower, right, the value, because we always want you to be covered. So I think having a good conversation with an agent that you like, that you trust, and having that conversation every year, every 2 years is the best policy.
Is there an automatic increase?
Yes, based on how. Yes and no, but yes, because your house usually appreciates every year. And so the last thing an insurance company wants is for something to happen to your home.
Oh, here we go. Sorry,
And
we're
then
going
we're
live on it.
Yep.
We'll continue the discussion. Hey, thank you, Mike Dubs. Let it snow indeed. It is snowing outside, and we are happy to be in the studio here today, Twin Cities News Talk AM 1130 for the Minnesota Real Estate Show. Every Saturday, we're here for your questions, comments, thoughts, 612-294-6949. Talking to Brad Sanford, Farmers Insurance. The question that came in was regarding how often to review your policy.
And that is every year or every 2 years. There's so many things that your insurance policy covers. I mean, it covers the value of the home. It covers your personal property, which if you took your home and you turned it upside down and shook it, everything that comes out of that is what your personal property covers, right? And hopefully you have replacement coverage. So it's not $2 for the sweater I'm wearing, right? It's $40 to replace the sweater, that kind of a thing. And then the personal liability coverage that you need to have in case something happens for you that you're liable on your property. And then there's ordinance coverage in there too. So if the city or the state says, hey, we need to change this ordinance, there's coverage for those kinds of things also, and loss of use. So if something, God forbid, something does happen to the home, that you have coverage so you can live somewhere else until the home is replaced. And, a lot of times with the insurance policy, when I say there's a standard policy, it's because you take the dwelling amount and then you take a default. The standard policy has a default for every coverage. Having a conversation with your insurance agent, you can tailor those and get them to what fits you.
What's new in your world?
Man, Continuing Ed this week, I love continuing education. I don't know
Yes.
if you do or not. In the
Alex
real estate
does.
industry.
Alex, right?
Love it so much. I save it for the last weekend. in
Right.
December.
Right. Absolutely.
That's what happens. Yes.
We know that feeling as realtors as well.
And continuing Ed, and then snow blowing 5 days. It looks like I'll have to do it again when I get home.
Right?
Everybody loves power tools, right? But the continuing ed teaches you things that like I never knew before about insurance, and it's law firms putting on real cases, and they tell you how it affects the client that you would have. So that was kind of exciting this week. So
Anything you learn? Anything new, helpful, interesting for listeners?
yeah, so if you're having breakfast and you get a knock at the door, and there is a police officer standing there, and he's saying your vehicle was in an accident. And you say, no, both my vehicles are in the garage. And he says, well, do you have this model of a car? And you say, well, no, I gave that, sold that to my daughter. If you are still on that title, there is a non-rebuttal liability there that the title kind of says you own that vehicle. So if like we gave our daughter, a car, and if we co-signed for a loan and we're still on it, our insurance could be liable for that accident that may have happened. And in this case, it was $140,000. They only had $50,000 coverage for property damage. So where does that extra $90,000 come from? Comes from Alex Warchest.
What do you do in that case? What do you recommend to people?
This is where you have to have a property damage number that's comfortable for you. And in that situation, there's really nothing that you can do. The daughter lent the car to a friend at college. And even though she lent it to that person, you're still liable because you're on the title. So
Clean chain of title. Is that what you're
yes.
recommending?
Yeah. So you do the right thing. I mean, you give your kids a car, but make sure that you transfer the title to just their names
Interesting.
so that they're paying the insurance and they're paying the loan and all that kind of stuff. Yeah. Yeah.
What else in
That
your
was an
world?
eye-opener
Yeah, that
for
is
me.
super eye-opening. Very cool. Anything else that you this past week that was eye-opening or helpful, you think, to listeners to be aware of?
Well, so we talked about the parade of homes, right? And right around there, we get the snowstorm for the boys hockey tournament. And at the parade of homes, you need to make sure that you're clearing the sidewalk and clearing the driveway, because in this state, we have a rule that you start out at 50-50 for who's at fault, the property owner and the person that is suing you, right? And so if the person that is suing you is more at fault, nothing is paid out.
Mm,
So that's what you're trying to avoid. Like downstairs, we saw a wet floor sign. You need to make sure that you do what any normal person would do and sweep or shovel and take care of all that and salt and that kind of thing. And then make sure that that space is a good walkway and take care of it. So, I mean, that's one of those things where you don't really think about that. People are coming to see the house. You're excited. You want to show them the house. You want to sell them a nice new home. And yet you have a liability there. And if you were in California and you were 10% at fault, you would have to pay 10% of whatever the lawsuit was.
mm,
I always just think about the mailman.
right?
They got to have a clean path. They're just trying to do their job and do it safely.
Right. Absolutely. Question came in from Franklin. Franklin had said, I have bad credit. Help. What can I do to get a home loan?
Yeah. Who's our credit repair
Jared
friend?
Havens and Credit Life.
Credit Life. They're an excellent place to start. Even just starting with your mortgage lender, they're not entirely sure what your situation is, exactly how to help you. But during that pre-approval process, that's what I kind of look at as like getting a financial physical. Like just talking on air, we can see you, we can hear you, and it's like walking into a doctor's office. It's like they could put their eyes on you and see, like, well, you seem fine. You walked in here, must be okay. Versus going into a doctor's office, getting a physical, taking your vitals, blood pressure, height, weight. Then they can start to assess what your lifestyle is, how to help you from a fact-based approach. So getting a pre-approval or working with a credit repair specialist would be a great first step.
Yeah. Alex Grip, Luminate Home Loans. Alex, what are you seeing in this market with some of your borrowers, some of the agents you're working with?
Yeah, I think what I've seen recently is we've had a couple scenarios where there's a non-occupied co-borrower. This is a situation that's common for a young person who's trying to buy their first place, and maybe they don't have the credit history, maybe they don't have the income to support that purchase just yet, not because they don't make money, but just because they don't have a stable history of income because they're young in their careers or on a commission-based job. Having a non-occupied co-borrower, someone that you trust, to help you qualify has become really common. And a way that this could benefit a lot of people, also how a lot of investors get their start, is buying that first place, just getting in the door, having somebody co-sign on your mortgage temporarily, because you can always refinance down the road in your own name, and then renting out a second or third bedroom. That is called house hacking. House hacking is a phenomenal way to get around this affordability conundrum that we're in today's market with rising home prices, interest rates where they are. It's a way to get in the door and start building equity quickly.
Tell me more about that house hacking.
Yeah, I would say this is not just for young people. It's really for anybody in their next purchase or looking for their first purchase. My mother bought her first home at 70 years old. She mitigated her risk on her purchase by having my oldest sister live with her. This was a great scenario for both of these grown women, right? My mom gets a renter. My sister pays something like $900 a month-ish. Mortgage payments is around like $2,000. That's a great deal for both parties. And my sister moved in, was paying $1,600 to rent a home in this other school district. Once her kids went off to college, she was able to move in, save a ton of money. She's now saving for her own home. And my mom gets to invest that money, maybe save up for another purchase or just save for retirement. It's a great way to get in the game and help people around you, family, friends, or another roommate.
Have someone eating your food, not doing the dishes,
Oh, right.
not filling the refrigerator.
Right. It is a super cool idea.
Yeah, I would say like it always seems worse than it is, but once you get in a groove, once you have somebody in there that you trust, it takes a little bit. If you stay down for a year or two, that's really when you can come up.
That sounds interesting. Like you have an agreement with someone to live with you for 3 or 4 years, but at that point, then they're going to go get their own home or they're going to move on to something else. That seems like something that would get you into the home. Yeah.
And Brad, what if that person who was living with you, saving money, bought their new home, and then you moved in with them, and then you rented the house behind you? So now you have an asset that's paying for itself, and now you're down saving money again for your next purchase, and you're saving that person money that was saving you money. This is a great way to go about building wealth, the slow and steady approach, and getting in the game.
That is a hack.
Yeah. Housing costs, we all have them. There's different approaches, unique ways to do it. Talking again, Alex Grip, Illuminate Home Loans, Brad Sanford, Farmers Insurance. We're already at the halfway point here at the Minnesota Real Estate Show. We welcome your questions, comments, thoughts. 612-294-6949. Before we do go to break, we got a great new listing. Bruce Williams, Remax Advantage Plus. The Minnesota Real Estate has one for $259,900. It's a 2-bed, 2-bath property, 1-car garage townhome. 8983 Sawgrass in Maple Grove. Really nice property, Bruce says. It is, again, brand new listing, $259,900, 2-bed, 1-bath, 1-car garage. A townhome, 8983 Sawgrass in Maple Grove. Check that out. Very nice new listing that just came onto the market. This is the Minnesota Real Estate Show.
Perfect for a house hack right there.
That's right. Rent that second bedroom. Make
Good
some
house
money.
hack.
Yeah.
Yeah.
There is no house hack for insurance.
Nothing you can do.
Nobody's going to help you pay your insurance. No.
It's all rolled into that escrow payment,
Alex, what do you see in 2023 for home buyers with, again, we talk a little bit lack of supply, some housing affordability. What do you see in that area from a lending space?
I can see rates starting to creep down in that second and third quarter of 2023 as inflation starts to get under control. We've already seen that be a trend so far. And I think as soon as rates start to creep down, like if we're consistently in the 5s, I think that's going to bring a lot of people back to the market that were like waiting on these rates to slow down. But let's say like if you get in the game earlier, there's always a chance to refi down the road.
How is it in the insurance world? Is it also like with real estate and mortgage, with the market, again, less transaction, less sales? There's some people that have left the mortgage industry, left the real estate industry. How does this kind of quick shift affect insurance?
Well, what you're going to see in insurance is you're going to see, unfortunately, a lot of the insurance companies that have taken losses in the last year and a half, they are going to up their rates the beginning of the year or the beginning of second quarter. So rates are going to climb. Insurance rates are going to climb. Interest rates, as he's saying, may come down, but insurance rates, unfortunately, I don't have any good news. Everything that I'm reading, 3 of the 4 top carriers in the nation are taking losses that they need to recoup. So
how about for people doing insurance?
I would think that because it's going to tighten up, that some people will consolidate. A lot of insurance companies are going to the bigger shops instead of all of the single individual shops.
Very interesting. 612-294-6949 is how you can join us. Had another question that came in. Margaret said, tell me about the VA loan. I served for 8 years trying to learn the best way to implement. Thank you for your service. Alex?
Yeah, absolutely. VA loan, best deal out there in mortgage lending. You get a lower rate than what's out there for the typical marketplace. No PMI, it starts with 0% down. There's a funding fee that depends on a few different variables, but your mortgage lender will research that and inform you. But yeah, best deal out there. So it depends on what your goals are. If you're looking for this to be a forever home, we'll strategize around that, around what's comfortable for a monthly payment, or if this home is going to be a stepping stone for living there for a few years and then moving on to another place.
PMI being private mortgage insurance.
Yes, thank you. We live in a world of acronyms. Private mortgage insurance, typically the fee that you see every month that people pay when they put less than 20% down.
Can it be used multiple times, the VA loan?
Most of the time, you can only have one VA loan out at a time, but that doesn't mean you can only own one house. So typically, like if you're looking to use it again and keep the house that you're in or you're moving out of, we would probably do a refinance into a conventional loan, and then you can use your VA benefit again on the new home.
What do they need for documents to get a VA loan?
Yeah, there's a document that we can get that basically is just like a proof of service. It just shows like you served in the like Air Force or whatever. It's just going to document your stop date if there is one where you served. It's basically just like a proof of service.
Is that the DD 214 thing?
Yeah, that's what we filed. Yeah.
You know it.
I've lingo, yes.
Yes.
You know the lingo. We're getting ready to start the second half here of the Minnesota Real Estate Show. Thank you for joining us again. We're excited about our new station in 2023, going to be on FM 105.1 Sundays, 8 to 9 a.m. Thank you for joining us. So many of you I know have watched for a number of years, listened. We super appreciate it. I hope you and your families are having a nice start to this holiday season too. We're going back live on air. Good morning and welcome back to the Minnesota Real Estate Show. Thanks for tuning in, everybody. Hope the weekend is going well. Brad Sanford, Farmers Insurance, Alex Grip, Luminate Home Loans. We're talking all things real estate, mortgage, home insurance as well. Brad, you talked this week, was continuing education. You've also shared some other great tips. Other thoughts to share for our listeners here today?
One of the things that I learned and gave good examples of. So I'm going to give you guys a couple scenarios here. So a snowplow was sitting on the side of the road. He decided to put his plow down and start plowing on 35W again. The two men that were driving in a Mitsubishi Eclipse didn't realize that he was pulling out, and they rear-ended him. And one of the passenger was hurt pretty bad. The second scenario is a snowplow driver figured out that if he went down the on-ramp, he saved about 8 minutes of his time for plowing. So he had been doing that many times, and a highway patrolman stopped him and said, "What are you doing? You're going down an on-ramp. You can't do that." And so the snowplow driver didn't listen to him, and one of the times that he went down the on-ramp, he killed a family of 4. So in which scenario do you think the surviving family got more money?
What do you think, Alex?
It's a grim scenario.
Yes.
I don't want to be wrong.
Yes. I'm guessing probably the first one based upon how you're laying this out.
The first one? And Alex thinks the first or second one?
I'm going to go option 1.
There is such a thing that is called discretionary immunity for government employees. So no matter what that snowplow driver did, you cannot sue and get money out of the government. So the family of 4 that died, their remaining family didn't get anything, and the driver of the Eclipse didn't get anything. The cases were thrown out. So the lesson here, on a morning when it's snowing and there might be snowplows on the road, is stay as far away from a snowplow as you can.
Super good info.
That was the biggest thing that I learned this week. I mean, you've always heard that you can't sue the government, right? And you don't really want to get caught up with a snowplow because they got a lot of weight there. They got salt in the back and a plow that can really rip up your car. But for me, that was You know, because I've always tried to, maybe they're in the far right lane, there's 4 lanes, I go in the left lane and get in front. From now on, I'm just staying as far back as I can. That was a lesson that learned the hard way there.
Question from Sav on social media. If you plan to move out of your primary home and rent it, how does that change your homeowner's insurance? Do you still recommend renters to get their own renter's insurance?
Always recommend that the renters get their own insurance. What that does is it changes it from an owner-occupied policy to a landlord policy. So that protects you. Those policies have different protections for the person owning the property.
Renter's insurance, should they get it?
Should the people that they're renting to make sure that the renters get renter's insurance? Absolutely, because that's the first policy that's going to pay out. It won't go to yours right away.
What's the cost difference from owner occupied to a landlord policy like that for Sav?
Typically anywhere from $200 to $500. It really depends on the property.
More?
Yep.
Per year, right? Not per month.
Sorry, per year. Yes, thank you, Alex. Yep. And it could be more. It depends on the property, really, is what it is, and it depends on the zip code, those kinds of things.
Yeah, thanks for the question. 612-294-6949 is how you can join us here at the Minnesota Real Estate Show. Alex, you gave us some thoughts and predictions moving forward. What else has been going on with you with Luminate Home Loans?
Yeah, Luminate is doing well. One thing that's been on my mind recently is for those of us who took a dip in income in 2020, get excited for 2023, because if your mortgage lender has to use a 2-year average for income, moving into 2023, we're now going to be looking at 2021 and 2022, which were hopefully better for you, to calculate your debt to income ratio, and the top number for that is your income. So we're really excited about that. I think it's going to bring a lot of new opportunities for buyers coming into next year.
Really good stuff from Alex Grip, Luminate Home Loans. Again, 612-294-6949 is how you can join us with any questions, comments, or thoughts. This one, interesting one. Franklin says, can I use crypto for my down payment with a home?
Yes, if you convert it to US dollar.
Tell me more.
Yeah, so when we do the pre-approval process, the 3 things we look for is credit, income, and assets. And they're ranked in that order. So assets is last because we know what you have today in your bank account is going to change from 90 days later. So we really just have to put together a plan. And if your crypto investment is a part of that plan for your down payment or your closing costs, as long as you know that we're not going to be paying in cryptocurrency, because the title company wouldn't know what to do with that. But we're actually going to be converting it at some point before closing to US dollar. The one thing I would say is cryptocurrencies are very volatile. So I would, if you have it now, I would convert it into US dollar if that is the plan to use it for your down payment.
Have you seen people doing that?
Yeah, absolutely. There's always a section, people always call me, it's more of our very younger borrowers usually, but saying, where do I put my crypto on my application? You can just put it in the other section, send me a screenshot to verify the balance. That way we know it's there, and then we'll talk about how we want to strategize for that down payment.
Brad, any of your kids brought up crypto to you?
Not really, no. But I have a lot of friends that are into the crypto, and there are a few that have some positions that they think will make them millionaires in the future. So they think it's going to be a big thing because Congress is looking at legitimizing crypto, and they're looking at doing a US dollar, digital US dollar. So they think that it'll play a big role in the future.
Mike Dubs, any crypto going on in your world there? Yeah, right.
Well, you need 7. We learned that a couple weeks ago.
7 credit cards.
It's the max.
Who was that again that said 7?
That was our Credit Life.
Oh, that was
yeah.
Chris from Credit Life said needs 7 credit cards.
Yeah.
Or the more, he said.
Yeah.
What was his advice? You could summarize.
Let's clear this up
Yeah,
for the listeners.
time out.
Yes,
Time out. We're
yes.
not saying you need 7 credit cards, but the idea was to have credit available to you, because part of what goes into your FICO score is your debt utilization, which is basically, it looks great if a bunch of people offer you credit and you don't use it. So typically when you amass a couple credit cards, it lowers your debt utilization number.
Has this changed in the recent future? Because I was always like, it took 5 major trade lines for you to get a home. That's what you needed. Is it different now, or is it?
Unless you're using some sort of like portfolio loan or portfolio lender that has like a strict requirement on number of trade lines, typical like conventional financing, you just need a FICO score.
Interesting.
Very interesting.
Yeah.
612-294-6949 is how you can join us here at the Minnesota Real Estate Show with your questions, comments, and thoughts. Alex, are you seeing many of your first-time home buyers using FHA products, getting back in?
You know, it's sad. FHA is a wonderful program. It's a self-funded program by everybody who uses it. But right now, this is like where the inventory piece comes into play. It's still a competitive market, and you need to put your best foot forward with what your financing is and not just your offer. So for financing, a lot of sellers prefer to see a conventional financing offer instead of FHA. So I think it's somewhere like less than 10% of offers getting accepted are FHA. And that's mostly because FHA is more common in the multifamily space. So multifamily owners who are listing their property, pretty common, they're going to get some FHA offers. That's because FHA, 1 to 4 units, you can do 3.5% down, which is extremely attractive.
We're at our final break, 612-294-6949. We appreciate you tuning in this weekend. Hope you and your families are doing well. This is the Minnesota Real Estate Show. Thanks for tuning in on social media. We really appreciate you. Hope you're having a nice weekend so far. Brad, Alex, thank you for all the great content. As we kind of head to the home stretch, Brad, last thoughts for listeners about you, knowledge, best way to reach you, that type of thing.
Well, one of the other things I learned here is, and the previous person was asking, how often do you take a look at your insurance policy? There's a scenario where they didn't have enough personal liability. Someone fell at their house, had brain trauma, and there was over $1 million in medical bills, and they only had $500,000 for personal liability. So take a look, have a good conversation with your agent about your coverages and what you have, and let them tell you why you should have more, or what's best for you. But the way to get a hold of me is the Minnesota Real Estate Team and .com, and under the insurance tab, or you can call me at my office, 651-690-2076.
A lot of those scenarios are not necessarily happy ones, but that's life, Brad. That's life. That's what happens, and that's why we need guys like you.
Absolutely.
Yeah.
Absolutely.
Ryan, we're blessed. We're blessed to not work in insurance. You got to think about the worst case scenario all the time. You got to be the realist. We're just out here saying, buy a home, get it done, invest. It's going to be great.
Right. It is interesting. And it's so true. It's so very true. And yeah, I just think about how that, so many negative things like that can come up, but you have to be expecting on it. You know what I mean? Brent?
Yeah, you got to have
Sorry,
that,
the phone was ringing.
have
Sorry.
have that conversation so that you can be protected. And the easiest way to protect yourself, this whole conversation, the easiest way to protect yourself is get an umbrella that protects the auto and protects the home. Easiest thing you can do for $400 or $500 a year, $1 million protects you, and anything that could happen preserves your assets, that kind of a thing. So easy fix.
Get an umbrella, because when it rains, it pours.
Could you use an umbrella for snow?
Sure. I mean, you could. Is it the best tool? Maybe not.
All you gotta do is tip it and get the snow off. I mean,
You could do it.
You
could do it. Again, 612-294-6949. Again, excited about our new show, new location, FM 105.1 in 2023. Be sure to check us out. There we'll be streaming the show and live on FM as well, Sunday mornings, 8 a.m. to 9 a.m. I'll be podcasting the show just like normal too. So we're excited about that in the new location. Know we've got a couple phone lines ringing right now. So we're going to go to those questions throughout the week. If you think of questions, comments, thoughts you'd like us to hit or to touch on, please don't hesitate to let us know. We're here to cover any and all topics. Value your feedback on anything that you specifically want to hear. And we're going back live on air right now here. Twin Cities News Talk, AM 1130. Welcome back to the Minnesota Real Estate Show. Thanks for joining us, Brad Sanford, Alex Grip, Luminate Home Loans, sharing a lot of great content with us today, guys, on this snowy Saturday here as we head to the home stretch. Brad, again, best way for people to reach you, to connect with you.
MinnesotaRealEstateTeam.com. I'm under the insurance tab. And the other option is to give me a call at the office, 651-690-2076.
Best, any big plans for the holidays with the family?
We get to entertain everybody at our house, in-laws, family, all of that. It's an exciting time. I love Christmas. My wife didn't know this, but I'm a Hallmark Christmas movie nut. I love all of those. I can sit and watch those all day.
Alex, you?
Yes, you are a Hallmark. No.
No response.
What am I doing for the holidays?
Yeah, what are you doing for the holidays?
My brother and sister are going to visit Minneapolis for the first time, and they're visiting from California next week. So we're going to have a tough conversation about it's gonna get cold. Bundle up.
Where are they coming from, you said?
California.
Wow. Where in California?
Basically Napa Valley, Calistoga.
Okay. Yeah, another question, text question came in. Can I get 6% of my closing costs paid by the seller? Alex?
Yes, you can if you're using the FHA loan, or if you're putting more than 10% down on a conventional loan. For conventional loans, if you put 0 to 9.99% down, you're looking at a max of 3% of the purchase price. For seller concessions, 10% down to 25% down, you're looking at 6%, and 25% or more, you're looking at 9% of the purchase price max seller concessions.
You see anybody doing that, those high amounts?
Yeah, I'm trying to coach all the realtors I work for. The borrower is putting, like 10% down or 20% down. Like shoot for the max. Or near it. Maybe you want to leave a little wiggle room in case something happens in the inspection that you maybe want to ask for more closing costs. But shooting for the max seller concessions, think about this. You are buying a $400,000 home. 1% is $4,000. Quick math here. 4 times 6, that's $24,000. What can you do with $24,000? One, you're just going to have typical closing costs, which are like title, starting your escrow account, county taxes, all that. So that's maybe like 2.5% of the purchase price, or let's just call it like 10 grand. So then what your lender would do is start to buy mortgage points, and those mortgage points lower your interest rate, but they add to the closing costs. You don't care about that because they're already being paid by the seller.
So you're basically paying a higher price and financing it essentially.
Yes. And the reason why that's meaningful is because lowering your interest rate is more meaningful dollar for dollar than lowering the total loan amount.
Interesting stuff. 612-294-6949. Another question had come in asking if we are seeing more home inspections in the market. Absolutely. More buyers are doing home inspections again. They're having time to do them. They're having time to review the home, to check things prior to signing off, doing kind of the final sign off on the purchase. And Brad, that saves a lot of post-closing troubles.
I was just going to say, please do the inspections, because if we know about something, we can plan around it from an insurance point of view.
Does that affect insurance in any way if there was a home inspection or not?
The home inspection gives us good information that allows us to tailor the insurance coverage to what your home is that you're buying. So there's nothing missed. So if we know that they don't have gutters pushing the water away, we can talk to them and have them put them on so that saves us the problem of the foundation being wrecked in the future. So there's a lot of things that you can do there. We want to know the roof age. That gives you a discount. We we want to know if the electrical and the plumbing and all that has been updated. If the home was built in 1905, when was it updated? Those kinds of things. So
another question came in asking about well and septic. If there's a well and septic on the property, how does that affect my home loan with well and septic? How would that affect your home loan? Any specific things you can think of, Alex?
It wouldn't affect your home loan. The only thing is that if there's part of the purchase agreement, there's some sort of repair that maybe can't be done because it's like winter, the ground is too hard, and it needs to happen at a later date, then the title company is going to escrow the repair amount. Basically, what most lenders do is they get 2 bids for the work that needs to be done if that's part of the agreement. And then they take 1.5 times the highest bid. So it's basically contingency money, and the seller doesn't get that money until the repair has been done. And what that does, it protects the lender and it protects the buyer to ensure that work gets done because the seller wants to get the remaining money back.
Very good question. Very good thought too with this time of year. And you probably see that a fair amount where the work on septic can't be done because of the frozen ground. So then you're having to escrow.
Right. Or maybe it's just like a really tight turnaround time, like the purchase agreement was like 25 or 30 days and you had to close really quick and couldn't get somebody out there to do the work. So we would just escrow 1.5 times the highest bid, and then the seller would get that money once that work is done.
Brad, how often does an average homeowner see a claim, do you think? I mean, in your experience in years, if I'm a homeowner for 40 years, 30 years, do you see certain numbers over time?
In certain areas of the Twin Cities, you see it's more prevalent. I have clients that have never filed a claim, and we adjust their rates and they're asking why I've never filed a claim. It doesn't change the risk, right? Because we have more storms. I think I've told you guys before that we've had double the storms in the last 1.5 years than we had 10 years ago. So I've seen, I would say probably just from my experience, probably about 50% file a claim. And it's, has to do with the roof and hail damage or, water damage or something like that.
Yeah, the last couple minutes of the show here. Again, if you are a buyer, you are a seller, an investor, you have questions, comments, thoughts, please don't ever hesitate to reach out to our team, the Minnesota Real Estate Team. We've got awesome agents all across the Twin Cities that work in all areas, price points, know your city, know your neighborhood, know your location. We're also licensed in Wisconsin. And so wherever you might be listening to the show or seeing us, please don't ever hesitate to reach out to us. Our approach is a little different. It is all about focused on you as the customer, working at your pace. We're very low pressure, all about providing value, solid information. Alex, Brad, last couple minutes, last thoughts for people as we head to the home stretch.
Yeah, you talk about different approaches. For me, and what it's like to work with myself or another loan officer at Luminate, it all starts with the conversation before supporting documentation, before pay stubs, before W-2s. It really starts with a conversation with your loan officer so we can hone in on what you're trying to do with your purchase, where you're trying to go, and talk about what the process is going to be like. And then you start with an application, online application. It only takes a few minutes. Gather those supporting documents. If you've got crypto, seeing the balances on that. And then we'll come together for a pre-approval meeting or a loan consultation and go over your options, talk about the process in detail. This is something that you probably only will do a handful of times in your lifetime. So we want to make sure you know what it's going to be like, you know what to expect. And that way we find you're a bit more motivated and a bit more certain when you know what's going to happen with the financing end for your search.
Yeah, really good stuff. Best way for people to connect with you, Alex. They got questions, fellow agents listening, really anyone at all, buyers.
Yeah, you can set up time for that initial phone conversation or just reach out to chat about anything real estate related. Getagripploan.com is my website. It's also my handle for Instagram. More than happy to chat real estate or fitness too. Really, if you want to chat about that as well.
Grip, 2 P's, right?
Grip, 2 P's. So nice. We do it twice. Getagripploan.com.
Yeah, Alex Grip. We love Alex. Does an awesome job. Illuminate Home Loans. Brad, last thoughts for listeners?
It's my last time on the radio with you this year. I just wanted to say thank you. The partnership has been amazing working with you and your realtors and doing this show. I absolutely love it. Thank you.
Thank you, man. Grateful for both of you guys. Do a wonderful job. Alex Grip, Illuminate Home Loans. Brad Sanford, Farmers Insurance. Just 2 wonderful guys. I encourage you to reach out to them for all of your financing, all of your home insurance questions, needs, comments. Big thanks to Mike Dubs driving in on this snowy morning. And again, hope everybody's having a nice start to the weekend. It is the holiday season. A lot of busyness, but hopefully you're able to take some time with your families and loved ones to enjoy. We will be back next weekend, next Saturday. Appreciate you tuning in here to the Minnesota Real Estate Show. Hope everybody enjoys the weekend ahead. Take care. Thanks everybody for joining us today. So appreciate it. Enjoy the rest of the weekend. We'll be back next Saturday.